Hey everyone, Coach Investor back to another video for today. So let's talk about CVS. CVS, pretty good dividend paying company. The yield right now is over 3.4% or so. So pretty good. Now on Thursday, the stock fell at one point close to 10%. Overall, it fell 8 to 9% or so. Now, what has happened? Probably some big news, right? Bad news as well. Because when a company like that loses around $9 billion in market cap, I mean, something significant should have happened. Well, so news broke out that Blue Shield of California looks to cut reliance on CVS and taps Amazon as well as Mark Cuban's drug firm for PBM services. Now, what are PBM services? In short, a pharmacy benefit manager is a third-party administrator of prescription drug programs for commercial health plans, self-insured employer plans, Medicare Part D plans, etc., etc. It basically helps you get the best drug for the best price, or at least that's supposed to be the plan. Now, saying that, you can already think that this is not an extremely profitable side of CVS business. It's actually not that profitable. And for it to be profitable, I think one analyst said they're making $3 or so at their scale, right? I mean, not $3 as a whole, but in a certain amount, $3 is what they get or something like that. Now, at a scale at CVS, just $3 is not very lucrative. So how will those smaller players be profitable? Probably they won't be extremely profitable, if profitable at all. Now, the regional health insurance provider will still retain CVS Caremark for managing specialty drugs, costly medication used to treat complex conditions like cancer and rheumatoid arthritis, which this, again, is costing more money, which means that the margins there are bigger, and which is why CVS still has that card. Now, still, it expects to save $500 million annually in drug costs once the program is fully launched in January 2025. Now, the Blue Shield of California CEO said in an interview that the move had been in the works for some time, but was spurred by CVS' reluctance to cover a much cheaper version of Johnson & Johnson's cancer drug Zytiga this year. We wanted to get the same drug for about $160 a month from around $3,000 a month, and went to CVS and said we'd like them to sell it, but they told us no for about 5 months until they would. Again, as a European looking at the American state of healthcare, it's very, very confusing, very, very complex, and for sure there are ways to reduce costs as a whole. I think CVS plan is to do so, right? It will take some time to reduce costs, to reduce all the complexities, but the whole healthcare system in the United States needs to be revamped. I don't know how that will happen, but it will happen at some point. Now, again, losing this, seeing the market's reaction, seeing how much market cap CVS has lost, you might say, whoa, that means that analysts are expecting this to hit the company extremely hard, right? Well, according to an analyst at Evercore ISI, they noted that CVS Caremark will still be responsible for providing specialty pharmacy services for Blue Shield of California, which is about 50% of member drug spend. Now, the firm sees a $30 to $50 million impact to CVS in 2025, or 2 to 6 cents of EPS. JP Morgan also sees a minimal impact with a negative 6 cent EPS impact to CVS in 2025. So you're telling me that an impact of, at a midpoint of $40 million caused this stock to drop close to $9 billion in market cap. I mean, talk about an overreaction, right? Now, of course, we have to look at the risk side of things, because if this becomes successful, many others might follow. And so if many others will follow, this will not just be $40 million in 2025. This might be hundreds of millions of dollars, maybe even billions, who knows? But until we reach that point, I think we still have some time, and I think CVS got the message. They have some levers to pull as well. Again, they have the scale to do things differently. And so currently, with regards to CVS, of course, things will change in the coming days as well, but currently the average price target sits at $92. Let's say it sits at $90, So most analysts see an upside of over 35% from the price it is today. And yes, while we did hear from management that investors, shareholders should not be looking at the prior outlook of 2025, they should be looking more to the 2024, and the $10 EPS by 2025 is probably not going to happen. And that's why you see the estimates right now, EPS 2025, $9.54, but still it is reaccelerating from 2024. And if you look at revenue, the same thing there, we can see some reacceleration as well. And the last quarter that came in, I think everybody was surprised by the amount of revenue that they generated in that quarter, the amount of cash from operations as well, which allows them to keep paying that nice dividend to shareholders, because you're probably buying this company for the dividend yield, especially right now, because it's higher since the stock has come down. But I think there is some growth to be expected in the coming years, especially if they figure out their whole plan of revamping the whole system, which I think they could pull it off. Now, currently it's not in my dividend paying portfolio. It will be by next week. I have to wait 2 days until I can buy these shares. Now, management themselves have put out a letter as well yesterday talking about that announcement. So they say here, they understand that Blue Shield of California has announced today as part of a new pharmacy care model that it will use a number of pharmacy services providers beginning 2024. CVS Caremark will continue to provide specialty pharmacy services. The financial impact associated with the partial termination of the Blue Shield of California contract is not expected to have an impact to our previously issued 2023 guidance and is expected to have an immaterial impact on our long-term outlook. So probably when they gave guidance for this year, in the last quarter, they already knew this was coming. So again, immaterial, not going to change their outlook, which to me sends a positive message, tells me that the stock right now being down 9%, I think on Friday we're going to be red as well. It's a classic overreaction, and in my opinion, it is a good opportunity to add to your position or open one if you've been looking at that company. Now, looking at the graph here, again, the stock sits at a 52-week low. We're back at a crucial point, which I think will serve as a nice support line, $65, $66 or so. It was previously back in 2020, a point of a breakout, and also a small resistance previously in 2020 as well. So I think this area right now could be a nice area to be accumulating or opening up a position if you are interested in that company. Right now, my dividend paying portfolio is pretty small. It has Vici, which I've had it this week. It has Deere Company, Verizon, BTI, and Altria Group. And I think with CVS entering that portfolio next week, I'd be pretty happy to start accumulating more and more shares, reinvesting those dividends in those companies as well. Of course, do share your thoughts down in the comments below. Do you hold CVS? Do you hold any other companies out there that pay a nice little dividend? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.